Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, March the 10th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High-level overview, wave 1 is done. Working on wave 2 down. We're stuck in this last multiple months. Is this the low or reverse? We said no, it made a new low. Is this the low and we're going to go breaking out? Again, we talked about that chopping, overlapping price action. That kind of said the same thing. No, we still need a new low. Now we're here for the last couple of months or so, going into the third month here. Is this the bottom reversal breaking out, or do we need yet another new low? And third time's the charm. I still think at this point, based on my chart analysis, I still think we need a lower low, but hey, price will dictate. Until price proves otherwise, we expect a new low. But if price proves otherwise, then we could discuss, yeah, maybe that is the end, but it just doesn't look right. And I'll leave it at that. Still think we're going to get another push lower. Jumping into the charting platform, we can see we've just been grinding. We kind of reached this resistance zone we kind of expected, and now we're just chopping in between. We got resistance up here. We got support on the Magic Fibo. We tried to dip below earlier today. This is the current candle. That doesn't mean the daily candle won't close below, but if we start closing below the Magic Fibo, that kind of sets the tone for us to go lower. So far, so good. Magic Fibo sets the tone for us to go lower. Well, we have a low, we have a high, we still got to get below this 618 down here at that 97 area. So we've been talking about this last week or two, that if we start closing below the Magic Fibo, then we got this little battle zone of support here, which is basically that 618 level. We start breaking the next level resistance zone. We got these swing points here, swing points there, as we were stair stepping higher. That's kind of what's been laying out for us. That if we close below the Magic Fibo, kind of sets the tone we're going to go lower. We break below this little swing point, that sets the tone we're going to test the next one. We cut below that, then it's game over. We make a new swing point low below the low that we are discussing. So why does this look like it's not the finished product, where that's the end and we're ready to go blasting off? For this prior move coming into it, we kind of had this overlapping chopping action, and we kept saying that this is not conducive to a reversal and a breakout. This is more likely going to need a new low to clean it up. We got that. Well, since this low, this is still overlapping, and it stopped in the zone in which we kind of expected it to so far. And no, it hasn't broken back down yet. But remember what happened in the last few of these. We've been looking at these. We had a beautiful three-wave remove. It pulled back, but it kept holding for a while till it finally broke down. Maybe this is part of that three-wave, kind of mimicking this. Three-wave up, hit the resistance zone, and we're just waiting for it to finally break down. But again, we have support where we are. Then we have this green box of support. So if we start closing below the Magic Fibo, that kind of sets the tone. We're going lower. We break this box. I think it's game over. We go to new lows. Any questions? So still this chop. It's amazing the markets are just doing what they're doing with all the war and the spikes in oil and all the things going down right now. Speaking of oil, did that not play out almost identical to what we were discussing? We didn't get the flush down, but when we started the war, it spiked. It went what? To that zone we looked at, and now it's reversing heavy. My humble opinion, it'll probably start coming back down, and I'll show you some critical levels to watch to see if it's going to break even higher, or was that last rip higher at the end that we're going to start normalizing back down. I'll show you that in a moment, but watch this closely. If we start getting a candle body, not the wick, the body closes below this, kind of sets the tone. We're going to go test this zone, and we close below that, then it says we need that new swing point low. And part of this overlapping again, and plus the move where it stopped kind of says we need a new low. But even prior move after this thing came down, look how it ended. It ended with a three-wave move. And typically, you don't end with this type of correction. If it's an A, B, C, that could be the end, and that's the reversal. You see that frequently. You typically get a 5-wave down here, not a 3-wave. So this is still, in my humble opinion, jacked up. Price action still jacked up on this. We still need a lower low to clean all of that up. And if you go even further back, it's just kind of stuck in it's a nice little zone. Don't get me wrong, up here at 100 and change, down here in the mid 90s. So we've kind of been stuck in that for quite some time. But still, we're at lower highs. We're stopping where we need to. If we go really bullish, we'll bring that back into the conversation. If this thing goes ripping and we break above this 102, that's the big short squeeze. That short squeeze was the big trade from last year that started with this 110 top, and people were shorting the daylights. It was anything but the dollar, and it just kept plummeting lower. Well, we're still in that downtrend, of course. That's why I'm still looking for this price action to clarify that we get another thrust. And once we get this next thrust, is that the end that we go reversing? Well, I would be remiss if I didn't tell you that at some point, that's what this means on this platform, that if we don't ultimately finish that wave 2, which I still think is going to give us another flush lower, it does end, right? It ends in a big way. That meaning this wave 2, is it over here? I don't think so. But somewhere that wave 2 is going to end between where we are and our original target, and that's a big zone, like 15 points. So somewhere we're going to end this wave 2, and we will go breaking new highs. And based on the chart, those ending of the new highs is significantly higher, 120 to 140, kind of sweet spot around 130. So that's a massive move higher for us to get up there. So please remember, wave 2 will end today, tomorrow, next week, next month, next year, 2028. At some point, it's going to end, and we should go breaking out, right? So far, so good. So if we can get to 102, that hits the short squeeze. Now, that doesn't tell me we hit the 102 and we short squeeze up into this next resistance zone. That, believe, folks, that's the end. It's over. That wave 2 is done, and we're definitely going breaking out. Yes, that could be the case, or we could go up to this resistance box and still get that flush lower. All that would be from the recent high to low would be a 618 retracement, then another push lower. So even though we do get a 102 close above, you can put that on your sticky notes or set an alert. Dollar index closes above 102 on a daily candle. The body of it game over, in my humble opinion. I think it's going to go ripping higher into this 104, 107 level. That's right where this resistance zone is. What is it? The recent high to low, that's the 618,786 zone. So if we bust up into here and we close above that 107, then I think it's pretty much game over. We're going to go starting making new highs, and we could call this last push down here over. But it doesn't look that way. We're still grinding, overlapping, and for months, this goes back to July of last year, we're almost coming out in a year that we just can kind of climbing sideways. Well, if this thing plays out like we originally expected, and that was over 3+ years ago, is this the original leg one? All of this chop for a good year plus is the consolidation, and we get leg two down. If you do the math and you look at the size of this thing, it's kind of interesting. From that original top out here, and that's not the, well, 3 years ago is the 115 over there. If that's leg one consolidation, and we do that again, just based on the time it took, it puts us in the mid 80s, and it would put us out to maybe September, August, something like that. August, September, October, somewhere in that zone. Just kind of where we're chopping. And then if you say, well, what about if we go from the original point? Is this the leg one consolidation, leg two? Well, it's possible this is over. It's kind of about the same size of that original move, kind of original move here. But I go more just in looking at chart patterns back in the history. What's current? What is current price action telling me? Not only past, but current, and kind of come together. So this looks like it's unfinished just based on this top reversal and the chop down here. That doesn't look like it's quite finished in reversal. It looks like it needs one more thrust. And if you zoom in on current price, what we've been watching, this thing still looks incomplete. And I'll zoom it way in so you can see it. This is still overlapping. And if you look at the initial move, it stopped in the box in which we expected it to. So far, so good. And every time it tries to think about breaking out, it gets rejected. So the only thing we haven't done in the last week or so is, as we rejected, we never really closed below the Magic Fibo. So we're stuck, right? Stuck in molasses between support, the Magic Fibo, which is this line right here, and then our resistance zone. So again, we start to see a red candle body close below this line. It sets the tone. That's a bearish sign. It sets the tone. We're likely going to go testing the support. Well, this would be the type of move where we have the low up to the high. We get a 618 retracement. And it's possible it could hold there and still bounce to go breaking out. That's why I always watch these levels. But what did we do the very last time? The same type of thing. Well, we had the low. We went up to the high. We did a 618 retracement perfectly. We bounced off of it, failed at the Magic Fibo. Then we went plummeting down to this new low. Well, this kind of repeat performance here. Kind of got the overlapping going up. Do we get a retracement 618, bounce, fail, and then go lower? Maybe. Or do we just start caving and get down here and don't bounce and we fail? But even though, just what I said last time, based on the chopping overlapping, we did get a 618 bounce. That's kind of bullish, but it failed to break above the Magic Fibo. That set the tone. We're going to make new lows. Well, here we got above the Magic Fibo temporarily, like we did over there, and it didn't hold and we broke down. What's it doing again? It's not holding, and it looks like it wants to break down. So I'd watch if we do get a red candle body down here, not the wick, but the body close below, sets the tone. We're going to drop about a point or so to come test this 97 and change. We close below 97, that sets the tone. We got a 75% chance. We're going to this 94.90, and a 70+% chance we go to 94.40 area, which again would be a new swing point low. We've been talking about it. We get it. Not by much on that one. And the previous one, talked about it, we got it. We talked about it, we got it. We talked about it, we got it. So again, are we going to get another swing point low? In my humble opinion, yes. I think we are. And do we get this bigger push to kind of match this consolidation second leg? That would put us much closer to our original target we gave 3+ years ago. But we certainly would come down in this zone, I'm still thinking. So I would not be bullish and say, well, I'm going to load the boat on going long the dollar index at this level because I think it's going breaking out. I would take a long trade on the dollar if we close above 102 and look for this thing to push a few points, pushing that 104, 107 level. That I think is high probability, but that's a big if. We got to get above this, close above that 102 to set the tone. We're going to go getting sucked into this big pink box up here, 104 to 107 level. You can see the level, roughly that 104 to 107. And even as we pull this back bigger, we can see what those levels, 104, 107. See it? So if we get above 102, I think it's a high probability this thing would go grinding higher and maybe even rip higher with the short squeeze because all those shorts are sitting there. But this price action it's not conducive of this going ripping out right now. It's more conducive of breaking down and going test the extensions down below, which would be what? Yet another swing point low in this overall chop. And that's kind of what we're expecting. So be careful. Yes, this thing has been resilient. Looks like it wants to break down and it doesn't. And it looks like it wants to break out and it doesn't. But we kind of had this scenario over here. Kind of looked like it was going to break down. Then it looked like it was going to break out. Then it finally broke down and it bounces off of 618. And you're thinking, ooh, well, that's a bounce. And we go breaking above the highs. Then we go on new high. And that's the end of this thing. We're going to go pushing that 102 up to this 104, 107. But then it failed, and lo and behold, we made a new low. So again, up and until price proves otherwise, the bias is this is going to break down. Look for a daily candle body close below the Magic Fibo, which is that big orange line. If it does that, sets the tone, we're going to come to the support zone. We break that, game over. I think it'll keep stair-stepping its way to yet another new low. This is the higher probability direction than this one up here. And again, the ultimate level is that 102. So if this thing pops and closes above 102, I would not be shorting that down. I'd be going long to look for it to pop up here. Otherwise, we start closing below the Magic Fibo. We're going to test this green box. We close below that. Say hello to my little friend we've been looking for probably a few weeks now. Expected this would probably break down further. It didn't. We got another retracement. So it's just part of that stair step and grind lower. Why is that important? For those people that are trading Forex, which I trade pretty much everything. Forex, Euro, been sitting exactly the box we expected to find some support. The Euro, the dollar index was expected to find resistance. Inverse relationship, the Euro would find support here. Looking for this reversal. The question is, we start closing above the Magic Fibo, we get the bullish vibes, right? We don't want a wick up here. We want a candle body close above that orange line. Then it sets the tone. We're going higher. And ladies and gentlemen, I have great news. I put the new install file for MetaTrader 4 in your members area. You can download it, install it, and it will give you your new Magic Fibo on your charts. So what does the Magic Fibo look like? There you go. So you download from the members area, reinstall the software, and you'll have in here let me go to my actually this one, and I'll close price with the chart. And you come in here and you get the MPA Magic Fibo line. That's now part of the permanent part of the software, which is so critical. And there you have it. You got all your goodies. You got your expert advisors. You got tons of things in here we use on a daily basis. The triggers, the Ichimoku, Keltner channels we hadn't looked at in a little bit, but we can look at that too. But Magic Fibo is in there. And I also included for your convenience in the chart templates when you do that. Whoops, didn't mean to do that. But in the chart templates, you'll have this new Ichimoku Cloud plus Magic Fibo customized for you. So all you got to do is click on it, and it'll automatically load the template with this one, of course, and includes the Magic Fibo for you. And I still left the 200 moving average. That's kind of a basis point for a lot of professional traders. Everybody uses a 200 simple moving average, but this Magic Fibo is far superior to a simple moving average. Amen? So there you have it. So feel free to do that at your earliest convenience. Now let's finish up. I do think that if the dollar starts breaking down, there is no ifs, there is no buts, there are no ands, and there are certainly an exception. This euro is going to go ripping higher should the dollar go breaking down. Inverse relationship. A lot of people say, well, why is that the case? Well, the dollar index is made up of a basket of currencies. And in that basket of currency, the most predominant currency in that basket is the euro dollar. And you could go to the software on this, and you can look at this from any angle. And it's amazing that it's exactly the inverse. So we have the dollar kind of engaging, disengaging, working its way up. Well, the euro looks exactly like that in the inverse. It is grinding and doing the same thing to the downside where the dollar was to the upside. Up a few pips, looking for this thing to start grinding. And I'm looking for a little push higher. And that is the plan as the daily starts reversing. So once I get a little breathing room, we'll go to break even +1. You could click it on the chart. And then we got our target shooting much higher and looking for this thing to go breaking out to a new high, as you can see. So I'm looking for this to start pushing higher in the days to come. As the dollar starts breaking down, the euro should go breaking out. But notice its perfect inverse relationship. It's grinding this way, about to turn over back down, and the euro was grinding down and turning and reversing up. So what do we have? PAI hook, trend momentum cross. We got our trigger, it entered, and that's what we're looking for this baby to grind higher. All right. So what's going to happen? We start breaking below this Magic Fibo that sets the tone. We're going to go lower. We get below the Magic Fibo, and then this cloud area, which is roughly that same support box. That's what I love about Ichimoku. It's got built-in Fibonacci, and people say, I've never heard that before. When you look at the highs and the lows and where the cloud areas are, it's kind of interesting how it fills in with the Fibo levels and our support zones. How interesting is that? So this is the Magic Fibo we're looking at to go higher. And on that dollar index we showed you a moment ago, you come back over here, and where's the Fibo? Where's the things located? It's actually that one. It's right here is where the cloud is on that other chart. And it just so happens that's the 618786 zone off the prior move. It's kind of interesting. At least I think so anyway. So in closing on the dollar index, we should go lower. We start closing below. And again, you got to zoom this in so you can see it. But if we get a candle body, we've been wicking down here. We need this red body to close below this Magic Fibo. Sets the tone. We're going to come test this support zone. Well, on the charting platform with this, it sets the tone. We close below the Magic Fibo. We're going to come suck down into the cloud area. We break through the other side of the cloud. It sets the tone for a new low. That's even Ichimoku 101. You're below the cloud, it's bearish. You're above the cloud, it's potentially bullish. And then you got to do multiple time frame. But you look at multiple time frames, and that's the daily. The weekly, we're below the cloud. That's why I'm still more bearish than bullish. And even the monthly, got a ways to go, and we're below it. So that's why I'm thinking we probably need at least one more flush for this thing to push lower. Running into the weekly the cloud up here, we got the Magic Fibo above, we got the daily, we're testing the Magic Fibo as we speak, and I'm looking for this thing to start breaking back down. Turnover. So what are we going to draw the Picasso here? We're likely going to see this push lower, break lower to a new low, push lower, and continue that downward journey. And on the weekly, we're expecting that this is going to turn over, push lower, turn over, push lower to finish this original move, kind of slingshot up, slingshot down, slingshot down, slingshot up, maybe re-engage in another slingshot, turn back down, maybe another few weeks, we push lower and we get that new lower low. Then we'll reassess. If we can get the weekly deeply oversold on this thrust lower, then I'm definitely going to what? Look for this to bounce. Absolutely look for that to bounce. And that's kind of the plan. All right, there you have it. So what's the euro going to look like? Again, I think we're going to go higher. The plan is for this to hold, start breaking above the Magic Fibo. Then it sets the tone. We're going to go test the resistance zone between that 118 to 118.80 area, kind of this zone up here. We break out of that. Then it sets the tone. We go on to 121, 122 and push out to 124. And that's kind of where my targets are up here. And this fits with the prior move that was way back here. And it sets the tone. If we can break this 123.50, then we're likely going to push into this big bubble. And that's where we could reassess. But my first thing is let's get this new high and we reassess. It's possible this could be the high, the low, and we ultimately get a lower high, almost a double top, and that's the end, and we go lower, possibility. Or we finally break and we get to where we originally talked about. We'll reassess at that point. For now, expect the euro is going to bounce and make a new high. That's kind of where we are at the moment of this going higher, right? Going higher. So I want to see a close above the Magic Fibo. Next stop would be this resistance zone where we kind of tested a few times. That Fibo level, that 118.70, 118 to 118.80 area. Then we break above 119.60 up here, which is a 786. Then we have a 75% chance we're going to 21.50, 70 plus we're going to 22.20 area, and onward and upward we go, aka a new high. What about the pound? Kind of the same thing. Talked about that scenario coming down, bouncing and going up, and looking for a breakout to a new high. Just like I've said for several weeks now, that I did not think, as we went through the process, I don't think that's the low, we're going to make a new low. I don't think that's the low, we're going to make a new low. I still say I don't think this is the low, we're still going to make a new low. As we do that, then the euro, pound, etc. are going to make new highs, right? New highs, there are your Fibos. Pound dollar, make new highs, there's your Fibos. So that's the plan. And the same thing, we set the software last week, and we talked about getting long on this. We're up 130 points on this one. Who could have guessed? Who could have thought? Who could have anticipated we should buy that PAI hook from oversold territory when it triggered higher? That's a good thing. There you go. Do we go to break even plus one now? I think we're going higher. So I'm going to put it up near the previous high. because I think we will break it. Then we could reassess. Do we go to the 40s? Do we go much higher? We shall see, but this is on-screen program. You don't think it's going to go that high? You just click it, you move it down the way you think it might go, or you think it's just going to test the top side of the Magic Fibo, the Ichimoku cloud up here. You can set it there. It locks in. On-screen programming, that's the beauty. But I'm a little bit more bullish than this. I do think it's going to make new highs. Amen? I definitely think it's going to make new highs. So I'm in a position of authority. How do you do that? You just push this little button right there. Break even +1. What does that do for you? It instantly moves your stop loss into profit. Notice, we're up 137, we got 136. So even if this thing plummeted down here, it would stop us out for profit. This is a no-lose trade, absolute guarantee no-lose trade here. So as we continue higher, we could take a profit. If I click this 1 right now, would lock in 137 pips, 138. Or I could just wait for it to reach it. This thing will hold and run as long as I have my system open and running. Can't shut it down. These levels are with the broker, but these levels will be sitting here, so I have to have my computer running and the chart running. But there you have it. Let it run. Hit this target. It'll automatically close at take profit 1. If you hadn't moved your stop loss, when it hits take profit 1, it moves it automatically for you into profit, and it makes a at-risk trade a no-risk trade. And there's many ways to get there, up 100 plus pips. We're there now. This is a no-lose trade. That's pretty cool, isn't it? So, in closing, I do think the euro is going to go higher, the pound's going to go higher, the dollar is going to go lower. Next up, we start breaking above the 618-786 zone, that 136, 137. We can start targeting 139, 140, 142. And if you look at this bigger picture, go out to a weekly, look at this bigger picture, if we can start getting above 142, it sets the tone. We're likely going to 147, maybe as high as 150, 152. We shall see. The dollar would have to break down considerably more for us to get up here, but that's still viable target is this 139, 140 up here, testing this prior high. We break it, then to set the tone for the 147.50, 152. Where does that come from? High back in May of 24, actually, excuse me, May of 21, down to the low of COVID over here. No, September 22nd. Sorry, that was the COVID's over there. But this 22 low, and from that high to low, we took out the 618. That's bullish to go up here. We took out the 786. That reiterates we're bullish to go up here. But heck, these are longer term targets. My shorter term targets at 139.40. We talked about buying it here. We reached our targets. We got a pullback, talked about buying it here. And next up, shoot for those targets. Rinse and repeat, rinse and repeat. So back to the daily. This is a good sign. Yesterday we closed above the Magic Fibo. Look at that big rejection wick. Look at this volatility. The war going on, oil prices spiking to 120 bucks. Like what? Look at that. Spiked up, closed above. Now another day, if this thing closes and we keep going, next up, probably get sucked and pulled in a 135, 136 zone. We start closing above this zone up here. My 618, 786, this is very important. So I'm going to go ahead and put that in your vision right here. This is resistance up here, that 618, 786 zone. So this is why we would expect a little potential bog down here. We get it. Or if it slices through, great. But I'm going to go ahead and change that to pink for resistance so we can keep it color coordinated for you. But Mr. Tucson, we end up going up through here and we close above this pink box, game on. And that's at least another 200 to 250-ish more pips, right? Once we get up here, and for us to get up there, we're still targeting another 200 plus pips. We're already up 130 something, 140. So do the math. We get up there from these lows down here at 134 to 140. It's pretty good. 600 plus pips. I like it. That's what we talked about. And so far, so good. Off to a good start. Euro yen. Still think you should be careful with this euro yen. I'm not looking for this thing to go breaking out necessarily based on the price action, a monthly overbought, weekly overbought, etc. I'm looking for another push lower. So any rally, in my humble opinion, should be sold. I'm get to my position of authority. If I get pipped out, I get back in. And is this going to pip us out, or we're going to get back in? I still think we're going to get a thrust to push down toward the Magic Fibo. We break that. We got further targets. But this thing is setting up after this big run. It's setting up a bigger correction. And some would say, well, what about this? Is that the three-wave correction? And this is the end. And we're just getting started to break out again. Anything's possible. But I don't make a habit of trading things when monthlies, weeklies, and dailies in overbought territory. I look for pullbacks. Then if we do go breaking out, I would short it back up here again because I don't think this thing's going indefinitely higher. It's looking for a bigger retracement. And what happens when we get a market crash? The yen tends to strengthen. So that's another reason I'm very leery about trading certain asset classes when your monthly's overbought starting to turn over, your weekly's overbought pushing lower, and then we get a little daily that cycles down, cycles up, and probably will end up slingshotting lower anyway. I still think any rally should be sold in the short term and look for this thing to come down to this 78, 79 target. Pound yen, you know how we feel. I expected this thing would grind and grunt its way toward this resistance zone. I'm not convinced it's going breaking out. Same kind of thing. You look at this bigger picture. Since our carry trade unwind over here, this thing dropped like 2,700 pips. And prior to that, I was the biggest bull of the pound yen. Back in COVID, I made a bold statement. I use everyone else predicts. You know, weatherman, this person, everybody and their brother, and Tom, Dick, and Harry does predictions. Well, my prediction, I leave the predictions to the prophets. I make anticipated calls, high probability calls, but I don't predict. Again, I leave that to the prophets. I digress, but you get the point. But back here, I made a bold statement that this baby would go on a 8 to 10,000 pip run back in 2020 when COVID low over here. And sure enough, looking at the bigger picture, I said that this COVID low, this was going to grind over the next several years, since COVID low, take several years, and we were going to go back to this high and make a new high. We're there. Then all of a sudden we hit this. What happened there? Carry trade unwind back in 24. Carry trade unwind. That's where you borrow money at the low interest rates. It was a negative interest rate, and you then buy like crypto or high, maybe NASDAQ, etc. You buy higher, more riskier assets with this low interest rate money. And then what happens when it unwinds? It unwinds very quickly. So that 2,700 pip drop said something on this chart. It's still speaking to me. That was very impulsive decline, obviously. And since this low, you figure, well, that's just the uptrend. It got a correction, and the trend is still continuing. Well, this still looks overlapping and corrective. And this looks like, in my humble opinion, those people that like wave counts and Elliott wave, that looks like a big A. All that looks like a B. And we likely need to come down in a C and likely even make a new low. Well, being expanded flat, meaning we got a new high in that B wave. This can't be a 1, 2, because 2 can't go above 1. So it's got to be an A-B type of correction. And looking at that, we probably need a flush down here. And then you put the monthly, weekly, daily software up here, kind of saying the same thing. We need a pullback. This has been a hell of a run, but we're starting to show signs of weakening. And if we can't break this little pink box we're testing, all roads lead to another push lower. And if we get the markets to unwind, well, we got 38 trillion, almost 39 trillion in debt. We're in war. We got a lot of things going. There's a lot of cracks in the foundation, a lot of stocks that their PE ratios are extremely high. There's a lot of things showing that we may get some sort of market crash. And I still think, Elizabeth, I'm coming to join you, honey, is out there. The question is, when is it going to happen? When it does, what do we learn with this pound yen pair? I'll go back in history. .com bubble burst. What happened? This thing dropped 9,000 plus pips. Grinded up into some new highs into 2007 financial crisis, and it dropped over 13,000 pips. So what's the next financial crisis? Maybe it's the commercial real estate bubble that bursts, 5 trillion in commercial real estate that pops. It could be all the credit card debt, could be maybe it's full blown out war. We don't know. I don't know what it's going to be called, but in my humble opinion, it's called Elizabeth, I'm coming to join you, honey, in honor of Fred G. Sanford of Sanford and Son. Used to love that show. Elizabeth, I'm coming to join you, honey. Here comes the big one. So it's a matter of time. It will happen. Our markets cannot go ripping higher forever without some sort of financial crisis. And this lines up perfectly in this same pound yen pair. So when the financial crisis comes, this thing's going to go tumbling. Will it split the difference? 9 and 13, maybe do 11,000 pips. We shall see. But one thing all of these have in common. During these lows, what happened? We had a monthly, weekly, daily, everybody oversold. Price action said we're likely going up. It happened. Monthly, weekly, daily is overbought. It came back to oversold. And this is why I was watching it back in here. It lined up beautifully. And it was perfect for this thing to go what? Boom. Now it's lining up for a big decline. So when I add all those pieces of the puzzle back into a bigger view, and you're looking at this current price action, this is possible. It could go higher. If our markets go ripping higher, risk on, risk off. Our markets go ripping higher, this thing's kind of retracing. But if this thing is likely coming down, this looks like an initial move, a 3-wave correction, stopping into this zone. So those of you that like moves, that looks very impulsive down, a little 3-wave correction. Next stop, we don't break this pink box to go up higher to these 216, 217 area, then we're likely coming down at that 205, 206 level. And that's my humble opinion. So I warned you when we were up several hundred pips on that initial move that we were going to get a retracement to this zone, likely see it in a 3-wave that even sets the tone for what? Next push lower. So be careful. Be extremely careful if you're long on this. You know, you bought it down here, looking at that daily cycle up. Be careful because I'm looking for rejection and a baby to go pushing lower. As the monthly's overbought, starting to turn, weekly was pushing lower, and this is a weekly started to engage up. Why? The daily pushed up, and my daily is going to cycle back down, and then it's going to thrust this into a push lower. All right, I'll show you over here. I believe I have one of these charts open. Yeah. So what is this? This was, and you can see here on the software, I'll get my little, well, I need it there. The monthly is overbought, kind of turning. Hadn't officially hooked and crossed yet. That's what I'm waiting for, but it's kind of turning. My weekly gave us the hook and the cross. And as I mentioned, I wasn't even looking at this, but this will engage, disengage, and it's engaging back up, likely going to disengage. And when it happens, what does that mean on this, what we call slingshot phenomenon? Well, when you go up and engage and then disengage, this is likely going to do what? Red hooks down, blue hooks down, green hooks down, which is money flow. That hooks down, then we're going to go from a lower high to a lower low where we engaged up from. So right there where we engaged up is that low. So we see red hook down, blue hook down, green hook down. Expect price is going to make a new low and get sucked and pulled into that cloud. And who's sitting there? Our Magic Fibo. That's why I still think we're headed down to that Magic Fibo area. And that's what's represented right here, Magic Fibo. So be careful. I would not be loading a boat to go long because I'm expecting this thing to break out. I'm looking for this thing to fizzle and turn back down. This looks like a little first move, A, B, C. This could be the beginning of a first leg down is a wave one. A, B, C, stopping in this zone is wave two. And that wave three down could be very violent. Not only reaching the Magic Fibo, but reaching some extensions down below. So this is why I'm keeping an eye on this. We get rejected from here and we see a pretty quick move, then this could be the one ABC2, like I was showing you. And Emil, if this is the one, and this is the two, so that's one, this is two, that wave three could be a thing of beauty. And what would be some of our targets on that? Well, the way you figure that out, if this is a wave 1, 2, and it's going to turn into a 3 down, then we need to see this type of price action. Use your Fibo extension tool, this 3-point tool. Click on that. You go up from the high. Let me pull this down a little bit so I can get to my high. That high, this low, this lower high we're testing, so it's a zone. Let's just say we go a little bit more and then we fail. Then you would expect if this is the, and I'll write that down, if that was the original move down as wave one, this three-wave correction is wave two. It's a terrible two, but that's wave two. If this turns into three, then we'd expect this to come down pushing toward that 200, which is 1,000 pips or so from there. That's pretty impressive. That's why I'm telling you, just to get to the Magic Fibo is going to be several hundred pips, 600 plus from where we currently are. Just to get to that, we don't hold the Magic Fibo, then we got targets down here at 203, 202. But typically, if this is a wave 1, 2, and what does it look like? You get a three-wave correction in your wave 2. It stops in this 618, 786 zone. And then it accelerates down, and it typically goes beyond the 1448, 1272. It pushes toward the 1618 or lower. So if this thing goes ripping down here, then we get a wave 4 and a wave 5. This thing could continue to push, maybe down in the 180s, which is what? Our big A, B, C. That's why I like it. That's why I've been going short, making a few hundred pips, get pipped out, do it again, rinse and repeat, rinse and repeat. But this is not conducive to going ripping higher right now. All this overlapping, chopping action, even with that, looks pretty impulsive, but that still looks like the A. All of that overlap is B, and we're likely coming down in C. All right, so shorter term targets, longer term targets, but the bias is if this baby reverses where we believe it's going to, and that is this zone up here, it should start reversing somewhere between that 212 and 214 area, that 618, 786 zone. So somewhere between 212 where we are and 214 up here, we reverse and it holds this low, this lower high that is, and then we impulsively start moving down and we see price start pushing toward what? High, low, lower high 3.2. From this high to that low to that lower high, this is what we'd be looking for. So if this is going to be an impulsive 1-2, we should see price start ripping down. And I don't mean it has to happen in a day. It can take weeks to get down there, but it just starts stair-stepping lower, breaks below the magic Fibo, reaches the extensions, keeps going, and then we see a nice thrust down here. Then this is typically where your magic Fibo that's sloping upwards will start flattening out. And maybe this is the 1, the 2, the 3, the 4 would come back toward that magic Fibo to fail. And then we get another big thrust lower in wave 5. And this is typical where you have a 1, 2, 3. Wave 4 correction cannot come into the area of wave 1. And then we make a lower high off of that, and that would be perfect. So no guarantees here, but the bias is this is going to fizzle in this green, pink box, and it's going to turn down from there and at least target initially the magic Fibo, followed by 203, 202. We break that, then we got 200 down here, which is 1,200 points from where we currently are. And I like it. Amen? Question is, when does it stop? Now, if I'm wrong, and we close above 214, then by all means, look for us to go toward 216, 217. But this initial price move, even if this is simply the initial version, we at least need a thrust down here to potentially go higher, or sets up the bigger move on that bigger unit I talked about, A, B, C, and this thing not only coming here, but going way down toward that 185, 180 area, which is way down here. And what was that? That bigger A, B, C. All right, enough of that. Let's go on to what the markets are telling us. ES, we got that big hammer from the other day. Big reversal. Look at that. Is this thing ready to go breaking out? It could be. We got what we needed. Look at SPX. Last time we got that sell-off, we didn't reach the magic Fibo. This is critical to have on your charts. Magic Fibo is key. And we did get the thrust, and now we're bouncing. This could be all we need. This could be the beginning of that reversal breakout. But hold your horses. We still got to get through this chop zone, which we've been in for months, as you can see. And is this going to go up here, get rejected again, and then we still go lower? Or is this the breakout that I still think is coming? Still think we're going much higher before we're done. But is this the end of the move, or we still need a little something extra? All right? Be careful on this. We still have lower highs, so you can put a little trend line in there. I like looking at ES, the futures, because it trades 23 hours a day, 6 days a week, every day but what, Saturday. So you get a lot more price action in here than your index that trades like 6.5 hours a day. Then it closes and you miss out on a lot of price. So this is why I look at ES, the futures, and we're still at lower highs. This is a critical level. So be careful on this bounce. It may be all we need, and this is going to go breaking out, but I would be in a position of authority on this bounce, because this could lead to still more volatility where we just kind of go again and we get another thrust like I warned you on these other ones. Be careful, be careful, be careful. And we got the thrust. We did push lower as expected, but what was disappointing was NASDAQ. NASDAQ did not get a new swing point low. That is still looking like we need to do it again. So be careful on this run, and this run today, I'd be in a position of authority. We got big resistance up ahead, but we got this kind of trend line that's holding at the moment. We break that, then we'll probably go pushing a little bit higher. But in order for us to have a true reversal, we got to get above this pink box. And I'll draw with the recent low, let's give it the new low. And this will be adjusted a little bit with that new low. There's my 618. There's my 786. So we're right in the thick of it. Actually, let me remove some of these because there's too many, and I'll give you a clean picture of this. Remove. We remove some of that 1 second. That right there. Remove. Now we have a cleaner picture. That's my 3-wave. That's why. My 3-point tool. So I'm going to start fresh one for you. This high, this low, and you see my resistance zone is pretty much in spot. You got the 50%, 618, 786. Main one is the 618, but the critical zone is the 618, 786 zone. So I won't say a 50% retracement's unimportant. Of course not. All Fibos are important. But what happened the last time we did this scenario, from that high to this low, we stopped right in that zone, and then we ultimately made a new low. Can't make this stuff up. So if this new bounce looks like a big reversal, that's a big hammer. Look at that thing. That's bullish as all get out. We're going to 26.7, 26.9, 27.8. Man, we're just ripping. Be careful, because we got the resistance zone we got to get out of. We start closing above this 26,000. Then I say we'll go to 26.7, 26.9, maybe push. But look at what the NASDAQ has done. This is a problem. We had a high. We never made a new high. S&P 500 did make a new high. Russell made a new high, but we did not make a new high on NASDAQ. So this looks pretty impulsive, and this still looks very corrective. So that kind of says we need a flush down to the 23-ish level. So be careful on the bounce. I said it before, and I'm saying it again. Be careful on the bounce. And if you're trading this intraday today and you're up 150 points, be in a position of authority. Take some profits off the table. Take a few contracts off the table. However you're trading it. Yes, this thing could go breaking out. Yes, I think we're going bubble hunting before we're done. All right, I still think we're definitely going bubble hunting up here before we're done. But I'm not convinced that this price action is over without a new flush. So it's going to take price to force and prove itself by closing above 26,000. Then it kind of sets the tone we're going higher, but that's a big ways to go still. And this price action where we get this move and this corrective action and a lower high, this is critical. Because we got a lower high there, I kind of said it the other week, we need a new low below this. We almost got it, not enough. That's why I wish this would have dipped into here. Then I'd be very bullish for a breakout. But we didn't. Sometime, well, what if it's truncated? Maybe. But it's probably going to end up fizzling and give us one more push lower. What else do we have going for it? We're still within that second week of volatility when we look at the seasonality report. We look for a correction in the beginning of March, and then from mid-March-ish out going towards April, etc., May, June, we start to see seasonality push higher. Well, that's kind of the plan. And I warned you about these corrections, and we did get a new low off of that low, but it originally started with the big run up, and that correction, we have not made a new low there yet. So I would be very cautious of this push higher. Yes, that's great, but we got big resistance. So force price to close above that pink box, then you can start targeting higher. I like above the 26,000 because that's the major top up here. We get above 26, which would be this zone right there. Then it sets the tone. You can see right above 26, sets the tone we should go breaking out. Up and until then, I'd be in a position of authority because this thing could certainly give us one more flush. All I can say again is, what if we get that flush? That's a good time to buy. Great time to buy. And what do we have going for us this week? We have, and I'll update this because I haven't looked at this in a bit. Got to come back up here to March. And this week, we have tomorrow, we're going to have some volatility. We have core CPI report. That could cause a little volatility. Then not too much on Thursday, but Friday, we have the core PCE, which is Powell's favorite measure of inflation. That could cause some volatility. Jolt's job report can maybe cause a little volatility depending where it prints. And remember, these reports are for what happened in February, not March, where oil prices went soaring. And we know about oil prices soaring in the 90s and the 100. It starts to push inflationary pressure up. But this report could still come out decent. Look, even they're expecting it to tick down a little bit. But this is for February. So this could be people start to see, uh-oh, it's ticking higher than last month and from 0.2 expected, and 0.3 the previous month, it ticks to like 0.4. And then this is February, and you think, well, what March would happen? This thing's going to maybe go spiking. The markets could easily sell off on that, right? What does that mean? Inflationary pressure means, are the Fed going to cut rates? No. And if inflationary pressure comes too hard, they might have to even raise rates. And the market might catch them off guard where they're expecting rate cuts, rate cuts, rate cuts. So this is some volatility this week. So please be careful. And what's interesting is how, since the shutdown and all, normally we did CPI, then PPI, then retail sales. Look, we got CPI, then core PCE, they kind of flipping it around. And then we don't get PPI till next week as we come down. I think it was Thursday or one of these days. FOMC, PPI. So you talk about some major volatility. What else do we have next week on Tuesday? OPEX, options expiration for VIX on Tuesday, and then your regular monthly options on the 20th. So you got all of that scenario. So I expect a lot of volatility in through next Tuesday when OPEX starts, and then maybe through the following week. But look what's on Wednesday. Kind of a, ooh, be careful. We have on that Wednesday after Tuesday OPEX starts, we have Wednesday, we get PPI. Interesting how it's not CPI, PPI like normal. And then we got FOMC right there. That could really set the tone for something dramatic, like a big sell-off potentially, or a worse, right? So be careful with this. So back to the chart. Does the chart make the move? Is the, these fundamental releases tell the chart what to do? Typically, it's not the case. So NASDAQ on this charting says we need a new flush. Even though it's bouncing, we've seen it before. We've seen these kind of rejection week, big push, and then it peters out, and it tries it again, it peters out, and we get a new low. But from the bigger move, this run up, you typically get a three-wave correction, and this doesn't look complete to me. I mean, to clean this mess up, again, I've spent a lot of time on this. Well, you can say, well, that could be a three-wave correction there. Sure. But if that's the three-wave correction, look at this. Chop, overlap, chop, overlap, chop, overlap, chop, overlap, chop, overlap. That's not conducive to a three-wave correction and a breakout continuation. That still says it's corrective. Corrective against what? The initial down move. So we need one more flush. So all I can say is, what if it happens? And I would be in a position of authority on that we're probably going to fizzle and push lower. Once we make a new low, this cleans all of this mess up and sets the tone for us either to go way higher or potentially much lower. But if we get down here, I'm buying. No questions asked. So I'm nibbling on this bounce. I expected that as we got this push lower, but I'm not looking for this to go breaking out. So I'm looking to look for this to come down in this box. Roughly that 23.3 would be ideal, but somewhere around 23.6, maybe down to upper 22. What is that? That's this 3-point tool, kind of sets those parameters. That high, this low, this lower high, kind of right in that parameter, that 23.4 down to 22-ish is kind of what we're thinking. So is this just going to rally to yet another lower high, lower low? That's kind of the plan. I could see that. So be careful. Amen. If I'm wrong, we go breaking above that 26, then we go long looking for 26.7. That's 700-point move. Pretty substantial. But I don't think so. This still says we need one more flush. Amen. So be careful. Any questions? So ES, a little bit different because we did make a new high over here where NASDAQ did not. We did get a flush I was looking for. I said, come back to Magic Fibo and lower. We got it. Is that the end? This could potentially be the end. And yes, it is possible that S&P could go breaking out while NASDAQ still gives us a dip, but I'd like to see them all dip. And we came close, but no cigar to a new low. Well, this pattern, we had a high, we got a new high. So it wasn't absolute, needed as bad as it is for the NASDAQ, but it might flush it down as well. So what if we can't go breaking above this lower high trend line? We get another lower high, lower low. I would love to see both. If we can get a new swing point low on this one, not as critical as the NASDAQ is because of this price action. If this would have been in this zone and ES did what it did and Russell did what it did, we'll go over that in a second, then I would be very bullish, not only for the bounce, but for the breakout. But I'm not. Because again, I'm pounding this home. We did not make a new low and we're still at lower highs. This is a lower high on the bigger side. And we get in this stronger trend line in this zone, lower highs. So this is why if you're bouncing on this and you're up about 180 a minute ago, I said, take your profits because I'm not looking for this thing to go breaking out. I'm looking for this to go flushing to clean this pattern up. Again, all I can say is we get down here, man, there's a beautiful opportunity to go long because by doing that, it cleans all of this mess up and sets the tone. Whoops, I didn't mean to grab that. I always tend to grab the wrong thing when I do that, but it sets up potential big run. 28, that could be several thousand points. We flush down to 23-ish. To 28, that's 5,000 points. Big run. Seasonality says we dip into March. Is that the end? Maybe. Or do we need one more flush? I would like one more flush, and maybe we get that big flush next week with OPEX and the FOMC, that kind of thing. And maybe it starts off tomorrow, a big sell-off with CPI being hotter than expected, and the hopes and dreams of rate cuts goes by the wayside. And then they say, wow, if February, before oil prices spiked or inflation is starting to push higher, man, imagine what next month is going to look like. And if we get that, the Fed might even start raising rates, and then that'll push the hopes and dreams. And what does the markets hate? Uncertainty. And that would give us a lot of uncertainty. Are they not only going to cut rates, but could they start raising rates? So we shall see. Join us again tomorrow and we'll see what that CPI looks like. And then again on Friday with core PCE. And then next week, like I told you on Tuesdays, OPEX, and we got FOMC and PPI next week. So they're kind of mixing it all up like it used to be CPI, PPI, retail sales. That's, as of late, no longer. So I wonder if that's kind of an omen that we're probably going to get some sort of sell-off. Well, price action here says we need one more thrust lower. So be careful. Got it? All right. Russell is, now this reached the Magic Fibo. This is what we're looking for. It over-exaggerated that move. Now this one is definitely different. Why is it different? We did a beautiful retest of the prior breakout. We grinded up to the zone. We got big rejection and we tested, and that's where we kind of broke out from, and we retested it beautifully. Big rejection wick. That could set the tone. We go into 3,000, 3,100. That's kind of the plan up here. Is this what we need, or we still need one more flush like the rest of the market? This one, unlike ES, well, unlike NASDAQ, from that prior, we definitely made new highs. Even into this year, we've been making new highs, where NASDAQ has not. ES made a slight higher high, but it's been struggling, and this one's been very strong. So be careful that this bounce could be the big one, but we still may get that flush down first. I was looking for that, but I wanted NASDAQ, if, like I said, if NASDAQ would have made a new low and ES and Russell did what they did, I'd be not only bullish on a bounce, I'd be bullish on a breakout. But NASDAQ did not do it. So up and until NASDAQ shows, well, that was enough, and we break above 26,000 and we close above there, then I'm game on for all-time highs, and the rest will follow suit. But if this fizzles, gets that one more flush, I think we're probably still need that one more flush. I keep bringing that home. Well, look at global liquidity. What does global liquidity have to do with it? We almost reached the Magic Fibo. Remember, I talked about that? Likely after this big run up, we're due for this thing to flush down toward the Magic Fibo. And if we did that, we didn't quite reach it. I said NASDAQ would be pushing toward that lower low we're looking for. Well, it didn't get where I needed it to, nor did the NASDAQ. So be careful on this, because now we got to run a new high to low. And this looks like a beautiful first leg down. We get a correction and then another push lower. Amen. So be careful. This is the resistance zone up here, Harold, from the 50 to 786. More importantly is the 618, 786, but you can see the lever. That's my 618 right there. That's my 786 there. And this green line is the 0.5 retracement. So this rally that we're seeing today with our markets, this thing could fizzle, get rejected, and push lower. And if we do get that, this looks like it needs it to complete this big run up, three-wave correction, followed by the next big run. That would be perfect. So be careful with this resistance zone. We can't break it. To go higher, we're going to flush lower and come down to this Magic Fibo at least, if not to these extensions. And what extension should we be looking for? I'm going to show you what that looks like. I'm going to remove this over here and go with the current price action. So now that we know what my zone's resistance zone, I can remove that. Now let's do a 3-point tool. This current high down to this low, to this lower high, we test this zone. Then we should look for maybe 46.4, 45, or is this a much bigger 1-2 type of thing? We'd come all the way down to 42. If we get that kind of flush, our markets are going to flush significantly lower. Why? Global liquidity. When we get a flush on the NASDAQ, or the Nikkei, which I call global liquidity, what was this big flush here? Right? What was that? Big flush. I was just kind of grinding higher. We got a big flush. That was the carry trade unwind. Then we kind of chopped in the zone, and even with that, I said the same song and dance, right? Well, Harold, this looked impulsive, and then we just got this chop and overlap and chop and overlap. We still got lower highs coming in here and chop and overlap. What did I say? We need one more flush to give a new lower low. It didn't do it by much, but we did get a slight lower low. to clean this pattern up to set the next run. Kind of like we're doing with the NASDAQ now. Not all price action looks the same, but the same overlap in the crap and the muck and mire says we need one more flush before we could go breaking out. That's exactly what happened here. Couldn't make this up. It was beautiful. And what was this? That was the Liberation Day. So is it Liberation Day that did it, or is it the chart pattern that kind of caused the tariff Liberation Day? Huh, scratch your head on that. But that's why I always go with chart patterns more than economic releases or, earnings reports, this, that, and the other, because earnings could beat expectation. The chart pattern says we need one more flush. Even they beat expectation, it can go flushing lower like we saw with Tesla, Amazon, a few of those. We still got the flush. I digress, but you get the point. So now that we had this big run up, I don't think this pullback is all we need to keep going higher. Anything is possible, but it doesn't look complete. That looks like we need a bigger retracement. This looks like a nice stair step lower, and we get a retracement and another push lower. All I can say again is, what if, William Bruce? What if we get that next flush down in here? Then it's going to pull ES down. It's going to pull Russell down. It's going to pull the Dow down and the S&P down. So we may get the NASDAQ flush we're looking for should this thing flush down here, just like I mentioned the last few weeks, that be careful. This looks like we need a flush down, and if we can flush down a Magic Fibo, this would probably be enough to get the NASDAQ to make a new swing point low. We didn't reach it, Harold. We fell shy by about 1,000 points. 51 and change would come down to 50 and change. So we missed about 1,000 points, and look where NASDAQ went. Pretty darn close, right? So you fill in the blank. What if, and it's not quite a new low yet, what if the Nikkei would have flushed down and touched the Magic Fibo, that additional 1,000 points, you think NASDAQ would have flushed enough to make a new low? I do. I certainly do. So again, be careful. It's ripping. Yes, it's breaking out to the moon, Alice, to the moon. And it's probably going to fizzle and give us that flush. Could be tomorrow, starting with CPI, could grind in and just kind of chop in this zone. I mean, we've been seeing it. Looks like it wants to rip, then it pulls back. Looks like it wants to sell off, then it rips. Looks like it wants to break out, then it sells off, then it pounces. It's the same scenario. We did get the flush I was looking for, but not enough to clean this pattern up. So I keep hammering that home, but it's that important. So what if it goes breaking above 26 and go long? If it doesn't, I'm looking for this flush down here. This is salivate country. Right there. S, A, L. If we can get a flush down in here, looking to go long, and that would clean this pattern up for not only going long, like talked about intraday bouncing here, but we got resistance up here and we didn't do what we needed. So a flush down here would set the tone for not only the big bounce and breakout, but to push us thousands of points higher with our target up here around 28, and might even supersede if it matches the original size of this move. That's the first move up, consolidation equal. That put us around 130, 132 up there. Wow. You're talking thousands more pips. That's 7,000 from where we are. We flush down into 23, then we're talking almost 9,000 points. And seasonality says what? We dip into the mid-March. Then we start grinding, stair-stepping higher and higher, April, May, June, July, etc., into at least the fall. That could give us that push. So I'm not going to tell you we're definitely going up here. My first target's up here, but I still want to see the flush first. Any questions? And that would clean this picture up. Again, those of you that like Russell, this picture's different. Since that high over here where everybody else faltered, we made new highs and new highs and new highs. So this is a much different bullish pattern than we see the NASDAQ, for example. But I still would like to see the flush. We got what I was looking for. Last week I even said it. Man, I expect this to come down to Magic Fibo and bounce. What is it doing? Hit the Magic Fibo and it's bouncing. But be in a position of authority on this bounce. Yes, this could go breaking out. Yes, I think it's going up here before we're done. But due to NASDAQ and the other FOMC, the news releases this week, that could set the tone. If inflationary pressure starts popping, it's going to disappoint the markets because, there went our rate cuts, mate cuts. There are no cuts. It might even be rate hikes that could really get the market to tizzy and sell off. That would clean that picture up on the NASDAQ, set the tone for everybody to go higher from mid-March-ish onward and upwards to fall. So what do we have in common? I think all of these will go bubble hunting as we rush into the fall this year, right? NASDAQ, even if we get the flush we're looking for, I still think it's going to go bubble hunting as we move into the fall. But this first couple of weeks of March is not over. OPEX next week, FOMC next week. So that sets the tone. Maybe we get that final flush into here, then we reverse. Let's see if that plays out. Let's continue. What about our black gold Texas T? Harold, what was the strategy? If we flush down here to the 50 and lower, we were going to buy UCO, take advantage of the big rip. And we said, well, if rockets would go flying, we're going to go breaking out. We did. And look at that price the other day, just went up to 100, right just under 120. So what did I instantly do? Market open yesterday. I bought SCO because I expect that this ridiculous surge is likely going to decline and start to normalize back down. And this could still set up that flush down here, that 40-50 zone. What's the critical level to watch on black gold Texas T? A little bit lower, but you look at that rip from, I guess we can start with the low over here up to that high, and that puts us right around that 70-ish range. Well, what if I don't like taking it from that low? Well, it's somewhere in the neighborhood, 75, if you use this last little dip before the rip. And the dip before the rip says, and we start closing below this 75, it kind of sets the tone. We're going back to the 60s. And what is SCO doing? Kind of chopping today, but it reversed. SCO, I bought down in here, and I'm looking for this thing to start going higher. So if we can normalize, because there's still a lot of volatility in here, but as price starts to normalize and price can go all the way down and retest and break below the Magic Fibo and start pushing toward that 50-40, this thing should go skyrocketing much higher. Amen? That's the plan. So I own at least 100 shares. I might have bought more, but at least 100 shares of this. And I'm looking for this thing to go higher in the weeks and months to come. That was the plan from day one. If we got a flush down to 40s, we'll go buy UCO and look for this thing to go bouncing up to that 618 zone and then look for another correction. Well, we didn't quite get our flush. We came, relatively close, but I still wanted one more flush. We didn't get it. War did it, and we, went skyrocketing. But where did it reverse, Emil? Can't make this stuff up. I told you, even if we got the flush down here, the probability we went visiting 90 to 100 was extremely high probability. And maybe even pushed the outer limit of that 113. Well, we didn't get the flush, but we got the war instead. And bingo, bada boom. From the high down to the low over here, we got what we were looking for. Now, this price pattern tells me we have a very strong chance, other than we continue to blow up everything in war and this, that, and the other, that we could spike one more time. But if we start closing below, I think that 75 range, 84 is going to be pretty significant, but more importantly, is that 75, then it sets the tone. We're probably going lower low. All right. But this would be that ridiculous move needs to normalize back where our prices need to be in the 60s. That's kind of a resting rate where drill baby drill is happy. Too low, they're not making enough to drill. Too high, inflationary pressure and good cost of goods and services, not good either. So whenever you get these big spikes, it always comes back down. What happened during the Biden administration during that period? It went up to 130. We just kind of drifted our way down. It took some time coming down here, as you can see, and we still expected we were going to get this to clean that picture up. Still need this flush. Well, this could be the end of that run. We come down here, make a new low, then I'll start looking long again. That would clean this bigger picture up for potentially bigger move. But we got what we were looking for. And I did say, we get down here, I'm doing UCO. We get up here, I'm doing SCO. So that's the plan. Amen? And I'm already up, what, dollar plus, almost $2 since that swing point low in the eights, low nines. So dollar plus plus. That's the plan. Any questions? So again, this is going to be critical. This thing could find support and go popping again. Shoot a bunch more rockets and we get, well, the war is not even close to being over. We're going to have to take out all the oil reserves so they have no more money coming in. We're going to take that island where 90% of their oil comes and goes out of. We're going to take over that island. We have to blow it up, whatever. That could really set the tone for this thing to spike again. Or they just say, well, we already took it over and they have no more oil production. We're taking over their oil production and we're going to send it in global markets and boom, this thing just goes plummeting down into the 50-40 range. So if I had to guess, that ridiculous move overreaction higher is going to curtail back down. Critical zone we're going to be testing is that 80 where we are now. That's the 618. And then down here at that 75. So we start closing below 84, sets the tone. We'll go towards 75. We close below that. We're headed back in the 60s. And by the time we get back in the 60s, this should be up a few more dollars. And we keep grinding. Well, that's the plan anyway. So there you have it. What about gold? Be careful on gold. Still think price-wise and price action. Gold needs another flush. This looks like it may be the beginning of the initial move down, three-wave correction. We need another push lower. And what is the beginning of this move here? This looks like it's probably maybe turning into a little wave 1-2. Got the high, have the low. We come up and test this 52.60 to 53.30 area. So I'm going to move this big pink box to the current price action up here. This is going to be a critical zone to watch. Actually, where we are, there's the 50% retracement up to the 786. So if this ends up being, and this looks like a little three-wave A, B, C, this could be the what, like I was showing you on the other one. That move down is wave 1. 3-wave correction is wave 2. Then we get a thrust lower in wave 3, 4, 5. And let's see how that plays out. Well, let's do a 3-point tool. This is what I do all day long for decades. Look at price action. God-given talent to read and interpret price. Use a 3-point tool. We have a high, we have a low. We're looking for a lower high. Let's just say it does the 5260, where the 618 is. Then we would expect, if this is the what? If that was the initial wave 1, this little 3-wave correction is the wave 2, and we go thrusting down in the 3, that would put us somewhere around 4,500-ish. Then we get a little wave 4 correction, wave 5, and that would push us down to what we've been talking about, A, B, C. Got it? So I'm still looking, and I'm very cautious about gold breaking out right now. This latest move and this chop and overlap looks like we need one more thrust lower before we can truly go breaking out. So please be careful on this bounce. That this initial move is very impulsive. This kind of overlapping, if that's wave 1, 2, 3, 4, that overlap, then we got this push higher and what? We overlapped. So this is still not conducive to ripping higher. So if you're in this and say, well, Gary, I'm up. Well, I'm up 94 bucks on gold. That's huge. Take your profits. I think it's going to flush lower. A, B, C. Got it? Minimum magic fib around the 43, 42, but ideally flush even lower, probably toward that, like I said before, maybe 4,000, 3,700 would be ideal for this thing to flush down in here and then look for the next big run. All right, so be careful. Silver is ditto. This is not conducive to the flush, was impulsive. 3-wave correction. Is this the same 1, 2, and we go lower? This does not look like this is the end of the move and we're ready to go breaking out. This looks like this is the first leg down, correction, next leg down. So I'd like to see this come down into the 50, maybe 40 area would be ideal. So be careful on any of this. Any rally should be sold because I think it's going to flush in the short term. Then we can talk about buying it at a lower price for the next run. Do I think silver is over here and it'll never go higher than 121? No, I don't think this gold rush silver boom is over. I just think we need this bigger correction to complete it. Then we can have free reign to go much higher. So again, be careful. This is screaming, we need another flush. What does that mean? We need a new swing point low below that guy right there, which would bring us below the magic Fibo and start to entertain some of our extensions down here, maybe around 50, 40, maybe we even push into the upper 30s. You think it'll never happen? This thing was at 120. It can't, no way it could get to the 30s. Well, that's what they said when it was at 120, right? They were saying there's no way we're going to get a 50% retracement. What did I tell you? What did I say when this thing went parabolic? Psychology of a market cycle. That the more parabolic you go and the more absurdly you go, the higher at least a 50% retracement. And that, my friends, does not look like that was the end. And notice, what was it? From the high down to the low was at 47, almost 50%. That's minimum, and we're not there yet. So this initial move does not look like it's complete. Look like it needs one more flush, and it'll achieve the 50+% retracement we were talking about. Pretty spot on that call. That's from experience, God-given talent to read and interpret price, and just revisiting the psychology of a market cycle. Harold, you don't go parabolic and ever it does come back. Remember last year or so, we were looking at things like, and I mentioned it in the writing, I said SMCI. And we said, super micro, man, this thing's going to the moon. Remember that? It's going to, let's get the bigger picture. It's going to the moon when this thing went parabolic. Huh. It went parabolic, all right. And this is before the splitsy and all that other 10-for-1 split there. But those prices were in the thousands, right, Emil? It went from 1,200 something down because of the 10-for-1 split. But I warned you that this parabolic move typically leads to a retracement back into where it started from, the base camp, as I like to call it. And look, it did it. That is the perfect psychology of a market cycle. So you think it can happen to silver? It did. My friends, it did. And it's still doing it. And where's the base camp? Kind of in that 50-40 range. And if we don't hold that, then we come a little bit lower, maybe that extension down here in the 30s. So yeah, we could get another big leg down. Even if we just match that leg, that would put us down here about 43. See my arrow? If I take that and I do the initial move down and then do a repeat of that move down, that puts us right at the Magic Fibo and below, which is perfect. And that puts us in the 40s, which is also perfect. And that's visiting the Magic Fibo on a weekly chart. That would be ideal. What if, William Bruce, this thing plummets down into the 40s or even the upper 30s and it touches this Magic Fibo? Back the truck up. That's all I could say. No buy, sell, to hold. Remember when I say that, I can't tell you what to do. I'm not a certified financial planner. I don't even play one on TV. Not my job. My job is to tell you based on price action, God-given talent to read and interpret price, how do we could potentially make some money? And that's what I'm doing. So if we can get that flush down here, you think there's no way we could split this in half to get down there. It's not going to happen. Maybe it doesn't. But when I set it up here, set about a 50% retracement, no way that can happen. No way we can go from 120 into the 60s. No way. It did it. And this price action doesn't look complete to warrant a breakout. It looks like we need one more flush. Amen? So in closing on gold and silver, these rallies should be sold, take profits, bank it, stick it in the bank, dry powder for another day, because I don't think this is the end of the correction and we're breaking out. Anything is possible, but the probable move is much lower. Get one more flush. What do we need? We need a new swing point low below that guy right there. And this is part of that chop and overlap since the low. Chop and overlap says we need one more low. All right? So be careful. Bitcoin. I'm still looking like we're going to do what we need to do here. As part of that bigger correction, we get a little A wave up, a B down, a C wave into the zone, and then we, like May, June-ish, summertime, and then we start cratering back down to a new swing point low below 60. So bring this into perspective, pull this back. I will go on record, like I always do. That is not the low. Repeat after me. The 60,000 low is not the low. This is not the end. I expected we'd start to see this grind higher, and this is a lot of chop and overlap. We'll probably pop into that maybe 80, 85 range, then get a correction back down maybe toward the 60s, and then go popping up in a bigger, this is what I think is unfolding, kind of a little A, B, rip into summertime, somewhere around that May, June area, C. Then we start doing a 5 wave down into September, October. Sorry, I got to take that off. I wish they'd allow me to move the chart and all once I put my lines on there, but that's why I use these. And then what are we going to do after that? Basically, this in a 5 waiver. 1, 2, 3, 4, 5 in the September, October-ish. That's kind of the plan. All right, here's where we want to buy, down in the 50 to 30,000 range. So started the conversation. This low is not the low. We're going to get a new low. Any day, week, month, year, anytime. Bitcoin hits below 50,000, that is a buy opportunity. Big time. This rally, I hope it pushes to the extremes of this surge. So we go up into 80, 85, somewhere around there. We pull back into the 60s. Then we go ripping back up in a bigger A, B, C. And it gets everybody hopeful. No, this is the breakout. Bitcoin's going to that 150, 170 target, guaranteed. Then it's going to miserably sell off very hard. 3, 5 wave down, somewhere in that 50, 30,000 range. What's my plan? Anytime it hits below 50,000, I'm adding. It goes to 40, I'm adding more. It goes to 30, I'm adding double, triple, quadruple. Whatever I can afford, I'm going to start adding. And I don't mean sell my house to do it. I mean just start adding, because we said it back in 2022. I did everything but beg, plead, and borrow for you. I said, please, this is a crime. Bitcoin below 20,000 is a steal of a deal. It's like committing a crime. And if you don't take advantage of this pricing down here, come 12 to 18 months post halving, you'll regret it. So it went from 20, my target was 150 to 170, a little shy, but from buying it below 20 and it went to 129.6 and change, that's not bad. And man, that's a pretty damn good return on investment. What have we learned? People say that it's not going to happen. We got ETFs now. The big dogs are trying to control. They've been doing that, but we got the same rinse and repeat. Bitcoin came out, 12 to 18 month run, got a pull back to a low, then a 12 to 18 month run, pull back to a low, 12 to 18 month run. So the blue lines are the halvings every 4 years. And we get the 12 to 18 month run. We get the crypto winter low about a year later on average. And then we do what? We buy low, we sell high, we buy low, we sell high, we buy low, we sell high, rinse and repeat. And this baby has been very, very accurate. Post halving, 12 to 18 month run, crypto winter low about a year later, starts grinding into the next halving, 12 to 18 month run, get a crypto winter low, buy again, 12 to 18 month run, rinse and repeat, rinse and repeat. And notice from the highs, 17, 21, 25, over here would be 13 when we got the high way over there, and 13, you can see the little spike right there. So we could do the same thing. 13, 17, 21, 25. So what does that tell me, Harold? Then you look for the year later, we get the lows. Over here, 14, 18, 22, 26. We're in 26, but it's late 26. Drew this on the chart before we even made the highs. Drew this on the chart. That's what you call rinse and repeat, rinse and repeat. So this 60 is not the low. Set an alert when it hits 50,000 and lower. It hits that, not a bad opportunity. In my humble opinion, like I said in 22, beautiful opportunity to buy down here to shoot for what? Hundreds of thousands after that. Just like we bought in the 20s and it went to 120, well, we buy in the 50, 40, 30, and go in the hundreds. I think it's going to break 200, and the upper 100s into the 200s, could be way more than that. I did make a statement way back when people thought, I don't even know what Bitcoin is. It's a scam. Bitcoin's going to be worth $1 million one day. Never. Couldn't possibly. We shall see. So what are we learning? We buy the dip, late 26, probably September, October, or if Bitcoin hits 50,000 tomorrow, I'm going to nibble. And it goes to 40, I'm going to buy more. It goes to 30, I'm going to buy a bunch more. And then hold it till when? 2029 over here. Why? Halving's in 2028. 12 to 18 months post-halving of our next halving in 2028 will be late 2029, and it'll continue to rinse and repeat. 13, 17, 21, 25, 29. Everybody got the rhythm? So we buy in late 26 and we sell in 2029. We buy in 2022, we sold in 2025. Rinse and repeat, rinse and repeat, rinse and repeat, and we'll keep going. Next halving in 28, then it'll be 32, then 36. You can do the math. So we can draw this on the chart, but it'll keep stair-stepping to higher highs, probably higher lows, higher highs, higher lows as we go through the next halvings, etc. All righty? So in closing on Bitcoin and Ethereum, they're kind of the same. In my humble opinion, we're in the crypto winter, and this rally is going to fizzle, and then we're going to come to even new lows. So again, 60,000 is not the low. We get to 50,000 and lower is a good opportunity to buy. This will probably rally toward 80 to 85, get a pullback, then rip into summer, somewhere around that 90 to maybe 115. I hope it's enough from that high to this low. We start pushing 100-ish, because then everybody and their brother is going to think it's going ripping. And sure, it could, but history has shown that this is likely going to end up selling off pretty hard into late year, September, October, maybe November, whatever. Then we're going to get this push up. Everybody's thinking, yeah, this is the breakout, and then it's going to go ripping lower. So alert, buy at 50 and lower. The lower it goes below 50 and pushes more toward 30, that's just screaming like it did when it was at 20,000 and lower last time in 2022. You'll regret it by not buying it in this circle down here. So in 2029, when it's blown past our original targets for this year and pushing the 200 and higher, you'll regret not buying in 50,000 and lower when we're up here at 200. I'll give you specific numbers when we finally get the high, finally get the low, then we can come up with more accurate targets, but you kind of get the point. It'll be well into the upper ones to twos minimum. From 50 to 30,000 up into the upper ones and twos. I like that return just like I like the below 20 up at 120 plus. All righty? How cool is that? So let's circle the wagons. Harold, we have on MetaTrader, we have the new install. It's in your members area. When you install it this go around, I showed it earlier, but I just rinse and repeat, you'll get the Magic Fibo right there. And when you go to your charting platform, I better go off in case it did what I did last time. I'll go to a different one. But you go to your templates folder and you have a new template with the Magic Fibo already for you. And of course, once whatever chart you like, you just drag the Magic Fibo to it. Then you go up and save your template and you name it Harold's template, whatever. If you don't want it on Ichimoku, you want it on something else, you just simply drag the Magic Fibo to whatever chart you're using. And then you go up here, you save a template and you name it whatever. All right. So that's available for you. Now, market-wise, I don't think these runs today are telling us we're going to all-time highs yet. onus on yet. So, was this enough for ES? It could be, right? Unlike the NASDAQ, we did make new highs, all-time highs, and we got a pullback. We're holding the big zone, and this conduces to potential, yeah, this could go breaking out. I definitely think we're going to go bubble hunting as we move into the fall. No question. NASDAQ, same thing. I definitely think we're going to go bubble hunting, maybe even higher as we go into the fall. But I'm not convinced that this was enough of a pullback because we did not make a new swing point low. All of this corrective and overlap really needs one more flush to clean this mess up to warrant setting up the next big run. Like I showed you on the Nikkei, we had this move back here with carry trade unwind, turned into Liberation Day. We got a new low by a hair. It set up the breakout to go bubble hunt. Another reason I'm not convinced that NASDAQ bounce is ready to go, because it didn't give us the flush we needed, that Nikkei, after that parabolic run, that's the initial move down, typically you need a retracement and another push. So, could this happen between the rest of the week into next week? Absolutely. We have FOMC next week. We got CPI tomorrow. If it prints higher than expected, and that's for February, what is mindset going to say? Well, oil prices soared to 120 in March. Man, that's really going to push those CPI prices higher next month. And that could set a tizzy for the market to sell off. And this looks like, technically speaking, this looks like the initial move. We retrace maybe into the zone. We get an extension lower. We come at least to the Magic Fibo, if not lower. Then that would pull NASDAQ. It would pull ES. It would pull our markets down with it. How do we know? Do the math. What happened during this period in June of 24 down to August? What did our markets do in June of 24? That's over here. June of 24. Guess it's that one there. Down to July to August. Coming down to that swing point low. And then boom. The same with ES. We got those pullbacks in our markets. Remember Liberation Day? All our markets just crumbled. That's Liberation Day there. That's the first one. Liberation. So with that in mind, ES did the same. When those pull back, we had the same type of pullback on these charts. Got the pullback, and then boom. So what happens if we get that again? It's going to pull our markets down. Just like I told you last week that we'd likely get a big sell-off. The Dow would go testing the Magic Fibo. ES was already going to test it. It was already there, but go lower. Even the Russell, etc., all touched the Magic Fibo. Again, I'm not convinced this bounce is the one that's going bubble hunting yet. We need the Nikkei to flush one more time. It'll make our markets flush just like we did here. They're all the same. Global liquidity. So what happened with Nikkei? We got a big flush, right? What did our markets do? ES got a flush. NASDAQ got a flush. Russell got a flush. So if we get one more flush, what does that mean? Likely it's going to pull S&P, NASDAQ, Dow, probably even IWM again, have one more bigger flush. Then we can buy and look for bubble hunting. What are we shooting for on IWM or Russell? Russell, we're shooting for 3,000, 3,100. IWM, we're basically shooting for that 290s up to 315, kind of rounded off 300-ish. Is this the bounce to get there? Maybe, but I would like to see that last flush to set up that much bigger move into what? Into the fall. So next week, FOMC, CPI, then PPI next week into FOMC on Wednesday. Maybe we get the sell-off and then we get the pop. That's what I'd love to see. One more sell-off, then we start rallying from mid-March-ish on to September, October kind of time frame. Same thing here. Get one more flush, even though we don't have to, we get one more flush. And then we get the big run into September. I guess I can move this way and move my bubble out into the future, because I don't think we're going to bubble hunting till probably fall. And that, well, that's a little too much. That is 27. So let me get that off of my scale. That was pretty good where I had it. Into late 26. There's September into maybe November-ish, something like that. And I kind of moved him. So I'm thinking somewhere around that 72 to 75 is what we're looking at. So what are we going to do? Hopefully get one more dip into next week with the rest of that push. Nikkei sells off. Everybody pulls down. Then we start ripping and stair-stepping into the fall, and we go bubble hunt. After we get to respective bubbles, I'm looking for a bigger correction. So whether it's Elizabeth, I'm coming to join you, honey, here comes the big one, or it's just going to be a substantial correction. Once you get up to the bubbles, look for that correction. All right, so that's the small term. Be careful with this. I think we're going to get one more flush. The calendar says we have some volatility potentially tomorrow and Friday with the release of CPI, then core PCE. They're switching it up. You remember it used to be CPI, PPI, retail sales. Now we got CPI tomorrow, PPI, core PCE on Friday. PPI has been moved to next week, and it's the day before we get the same release into the Fed speak and FOMC. So it could be that inflationary pressure ticks up tomorrow and the markets overreact and say, well, if that's with February, with prices sparking into the hundreds on oil in March, that's going to really be horrible next month. So our price or our rate cuts are off the table and might warrant a price increase, right? A rate increase because of inflationary pressure. Markets could sell off hard into this next week. So be careful with this. Price says probably one more. Nikkei, again, kind of following suit with global liquidity. I don't trade this market. I use it as global liquidity, but it's kind of saying the same thing. That looks like the initial move down. We need a retracement and another push. So if we get what we're looking for, and this baby does, remember how I said I wanted to come down here to bounce. We didn't quite do it. So how about a retracement, a little overreaction, and then we do it? That would set things up beautifully for the big run in from mid to late March into September, October, and bubble hunt would be up here in the upper 60s, etc. for Nikkei, and it's going to be what for ES? Just closing 72 to 75 when we go bubble hunting up here. It's back out that way to show it to you, but that's what we're looking for. And NASDAQ would be in the 28,000-ish or higher, 27, 28. And then Russell would be around that 3,000, 3,100 / IWM, around that 300. And even the Dow would be to new highs up here in the upper to mid 50,000-ish. We hit 50, probably grind probably midway into the mid 50s as we bubble hunt into the fall. But look for one more flush. Today, tomorrow, next week, maybe FOMC, overreaction. Then we start running from mid to whatever March, April, May, June, July, August, September, October. We start grinding it way up. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. And don't forget, we do have it on NinjaTrader, and soon I'm working on potentially putting it on TradingView. But I got to finish all my tweaks and a few things I'm doing, and we'll potentially look at putting it into this TradingView. So we'll have, I would like it in here for myself because I do use the charting platform, and I like to see my indicators at the same time instead of switching from that to another chart to show you what the indicators look. Maybe we could do it all at one time. So either way, I use them all. I use them all. So with that, take care. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all.